Welcome everyone. In today's video I'm going to be sharing with you how I use the Fibonacci tool combined with order blocks and supply and demand zones from an SMC perspective. It will definitely increase your win rate and help you filter out a lot of bad trades. So these are the normal Fibonacci ratios that most people use when trading retail, and they'll be expecting price to, from the low, to make a high, or however it does it, and then pull back into one of these zones, take off. And this does work because it is a bit of a self-fulfilling prophecy. You know, a lot of retail traders will have buy orders at any of these levels, which can accumulate and push price up a bit. But the win rate for that I found isn't that high, and I prefer to use it combined with my SMC view on the market, and it definitely helps filter out some bad trades and get a high win rate and good risk reward. So these are the settings of my fib. If you want to copy them, I use the 70.5%, 79%, and the 88.6%. They're not the classic Fibonacci numbers that you'll be seeing, the 38.2% and the 61.8%, but I use them to highlight areas that are discounted or premium. So anything below this 70.5% is a discount area, and then below 79% premium. So these are the areas that you're going to be wanting to get in your trades on. What you're going to be looking for is price to come down, create a low, and then kind of create a demand zone in anywhere in this range, and then take off, and you're looking for a pullback then into the demand zone that's in here. And these will be a higher probability than, say, a setup where so you could have a supply zone, a demand zone sorry here, and you could have another demand zone here. And so you want to be avoiding the demand zones that are above the 70.5%. Obviously there will be times where it does react off this demand zone and take off again, but they're going to be happening less often. And so for the high probability trades, you want to be looking at the premium areas. And then the same goes for supply zones, just the other way around. So I'll start by analysing a past setup that I took using this method, and then I'll go into how I'm using it in the current trade that I've got about to go on. That's been sent to the Discord if you want to join that. It's all free. The trade is sent in there, and I'll be explaining that after this. So this price action is all a bit messy. I mean, you could have got a trade up there. I think at one point there was a low time frame entry here, but I didn't take that. But you've got a break of structure here. You know, we're looking bearish for a bit. Obviously, still going up, but break of structure here. We're looking for sales. What you can do is set your fib from the high to the low, as you normally would. And then you're going to be looking for order blocks above the 70.5%. So you can see one here. You just mark that up. I'll just get rid of everything else actually. So you could take a sell limit order straight off here, stop loss above, targeting this demand zone, but 2.5%, I mean, it's a decent trade. And you could, the wick on this order block is quite long, you could always target the body, which is something I do if it is just a really big order block, because most of the orders are normally around like the 50% equilibrium area. I'll make another video on that. But that plays out quite nicely for 3.2%, so you could do that. But what I did is I waited for some lower time frame confirmation when it came back into the zone. But this order block is valid, you know, it's above the 70.5%, and that's the main theory behind this concept. And what you want to be doing, you want to be looking for your supply and demand zones that are within this area, not what other people call the golden zone, between the 38.2 and the 61.8, because there's just, you're going to get lower risk reward and lower win rate, so it's not really much point taking those trades in my opinion. So what I did then is I went onto the 5 minute, which is a time frame I like to use for low time frame analysis, 5 minute and 15 minute, and then price came back in. You've got a low here. The structure hasn't been broken yet, so we're not looking bearish yet. It was broken during the Asian session, but I don't trade that. I'm not awake during this time. So then at 6 AM, I had a look at the markets. Price took out the Asian highs, still in the zone. It actually bounced off the 88.6, Fibonacci retracement, so that's a nice confirmation and a nice hammer candle. And then what we had is new structure formed here, which was broken here. So you've got broken structure or change of character here, whatever you want to call it. So now we're looking to go bearish. What you can see is some imbalance left behind by this candle, which is what I saw, and then a nice supply zone left behind here. Then you can get your entry on this pullback here to the supply zone, and then target. First target could be the Asian low, 6%. And the second target is quite a big demand zone. You can either target the top, you control your stop. Targeting these lows, you probably get stopped out of break even, take a bit of a position off of the Asian lows, and then you get break even up here. What I did is I just targeted the Asian lows because that's what I'm happy with for my strategy. 6%, that's a nice trade. But you could go into the 1 minute. Something I've noticed, this is all in hindsight, but there was a nice demand zone here that you could have targeted. And that demand zone actually played out quite nicely for 15%. So that's how I use this method. Obviously you can, depending on how you trade, you can have your stop loss up here just to be extra safe. Even that's still 6.5%. Obviously you have a high win rate trading like this, but low risk reward. So it's all about how you like to trade and how you can manage your psychology. So this is how you can use Fibonacci. It also kind of ties in with the Asian session manipulation that I've talked about. If you want to go and watch a video on that, it's on my channel. But yeah, that's how I used it on Euro USD in a past trade, but now looking into a future trade to prove I'm not just trading in hindsight all the time. This is a trade you can take as well. The entry and stop loss and take profit will all be on the Discord, but I'll show you the setup here. So you can see price has been going up, making higher lows, higher highs, higher low, higher high, higher low, higher high. And then what you get here is actually a change of character. Or breaker structure, call it what you want, but sign that we're going bearish now. So what you can do is you can draw your fib from the high to the low, bring it across, and go to a smaller time frame. Look for any supply zones. See one here. So as you can see, the supply zone is above the 70.5%, so is that definitely a discount, and it's even most of it above the 79%, so it's a premium zone, going to give you the best risk reward. And it basically makes you avoid supply zones like this one. There's nothing wrong with this supply zone. Liquidity was previously taken out, and it caused a break of structure, so that's a nice supply zone, but it's not above the 70.5%, so there's low probability of it actually coming to this zone and then carrying on downwards, which is what hasn't happened. So it can help you filter out trades like this, which is always good. Obviously, if you want, you can wait for price to come back into this zone and then try and get a low time frame confirmation. I might do that as well, but I also have some limits set somewhere in here if you want to find out. Then just join the Discord. But this is actually kind of a similar setup to the Euro USD trade. The Asian range here, taken out to the upside, break of structure to the downside, looking for a pullback to then continue downwards. So this is how I use Fibonacci. Probably different to what you've seen before, but hopefully it changes your view on the market a bit, and you have some new insight into how to trade SMC and which order blocks to trade, because there are a lot, and it does take a while to filter out which ones have a high probability of working and which ones don't, and then you know which ones to avoid and which ones to focus on. So I do hope this video has helped you learn a bit more, and if it has, then please leave a like and subscribe. It really helps out the channel and gives me a bit of motivation to keep on doing all of this for you. That's going to be it for today, so thanks for watching.